Good evening. I'm Steve Weil with Royal Management Services. And tonight we're going to talk about reading and understanding association financial statements, as well as how to use that information for decision-making purposes. So let's get started. We have a bit to cover, so we're going to do that. So a little bit about our firm and I. The firm is Royal Management Services, Inc., and we're a division of RMS Accounting. So we kind of like numbers and accounting and think it's an important part of every association's operations. Firm's been providing accounting and bookkeeping as well as tax services since 1984. Seems like an awful long time these days. And we added the management of community associations, co-ops, condo association, and HOAs in the year 2000. So, and not only handling the accounting, but we also handle management for many of those kinds of association, as well as our accounting firm handling accounting services for all sorts of companies. Again, my name is Steve Weil, and I'm the president of Royal Management Services. And I've been working with both businesses, individuals, and associations. Well, it's a lot longer than 25 years these days. I started in 1984 and have been with the company since long before I had any gray hair. But here's a little information on me. I'm not going to spend a lot of time on that. So today we're going to talk about the financial information that is required by Florida law, the compliance portion of this. We're also going to talk about financial information necessary for informed decision-making by both management and the board. We'll talk about how to read and understand the financial statements you're getting and how to drill down into the details so that you can get a little more involved and find out exactly what it means or what's included in a certain section. We're then going to talk about having some proper controls and procedures to protect your association from theft or fraud or embezzlement. And last but not least, we'll try and spend a little bit of time on transparency. So with all of that said, if you're ready to get started, if you are a condo association, the financial requirements governing you are under Florida Statute 718. Now, if you're in an HOA or co-op, and they're much the same, their HOAs would be under 720 and co-ops would be under 719. So accounting records for the association have to be separate records for each condominium association, and you have to have at least a minimum of 7 years of accounting records. So typically we advise to keep the end of the year statements forever, but all that detail and such you should have for at least 7 years going back. They should be accurate and itemized, containing the detail that's necessary to make accounting decisions. They should have a current account for a monthly, a bi-monthly, or quarterly period. Typically it's monthly, as well as a year-to-date information. And you need to have that all available. You need to also maintain all of your audits where an audit is required of your association or a review. And all of the contracts for work performed, all of the bids should be maintained. Bids have to be maintained in Florida for a 1-year period from the date, and the contracts indefinitely where you've hired somebody to do work. So the statutes require you to keep all of that stuff. And as I say, for the most part, we follow 718. So within 90 days, including whether you're a HOA or a co-op, within 90 days of the end of the association's fiscal year, the Board of Administration, hence the Board of Directors, needs to prepare a financial report detailing the year's financial activities. 21 days after that, but no later than 120 days after the end of the year, the association board must provide a copy of the report to each unit owner by mail. It can be hand-delivered to their address, or they can be provided something telling them where they can get it. So because we don't want to just kill trees and mail things out, in the management world, we typically send out a postcard that tells everybody the annual financial statements are ready and they are available if you're an owner free of charge. And you can get it by requesting it by mail, by calling and requesting us to mail or email you a copy, or by emailing. And the copy is provided to you free for our clients. Sometimes they even just stop by the office. The unit owners will stop by if they need a copy or want a copy. But you don't have to mail this multi-page document to everybody. You do have to let them know that it is available and it is free to them upon request. So the annual financial statements come in a number of flavors or styles. Okay. For small associations, it might be cash receipts and expenditures report. For larger associations that are not required to have a review or audit, you could have compiled financial statements. Compiled statements can be produced by an accounting firm or by the management company. It's simply a matter of compiling the information and doing it on a accrual basis, typically, meaning counting the expenses even if they haven't been paid yet, and the receipts even if we haven't received certain receipts yet. Now, if you have over $300,000 worth of revenue, you are required to have a reviewed financial statement. That means that you must hire an independent CPA firm to take the accounting data generated by your board or management company and perform a review of that information and provide you with a reviewed statement. And if your annual revenue is more than $500,000, you must have an independent CPA firm perform an audit of your financial statements and provide you with audited financial statements. That means that they will be checking, are the bank balances, are they actual? They'll verify them with the bank. Are receivables correct? Are payables correct? There's some verification there. There's some additional checking. And then there are some disclosures that CPA firm will make telling people about the financial statements and the ongoing ability of the association to continue its function financially. So that is required if you're over $500,000 worth of annual revenue into your association. Okay? No longer do we have this 50 unit regardless of revenue. Now you have to be less than $100,000 to do cash receipts and expenditures, and you have to be over $300,000 for you to be required to have a review, and over $500,000 for you to have audited financials prepared. But there is nothing preventing a board that believes that either a previous board may have played with the financial information or just wants to make sure and assure everybody that their numbers are accurate. You are always open to go and get a more detailed report. So we had a hostile takeover. A board took over, threw another board out. There was lots of accusations back and forth. And the new board, even though they only had $300,000 in revenue and were not required to get an audited statement, determined that they wanted audited financial statements so that they could represent to the owners that they had an independent accountant review everything and audit the financial statements and give them the assurance that they were accurate going so that they would be able to go forward from there. And there's nothing preventing a board from asking for something more complex and, of course, paying for it. Annual revenues of the association are not limited to the regular assessments and the special assessments and the interest income. They also include late fees. They include any insurance proceeds. So if you collected on an insurance policy, any fees, fines, or collections, or anything like the sale of a unit can throw you over the top. We had an association that foreclosed on one of the units. They held it for several years, and after owning the unit and renting it for 3 years, they sold the unit. When they foreclosed on it, it cost them, were paying a mortgage of about $200,000. When they sold the unit, it was worth $400,000, and that threw them over the top, and they needed to get an audit, even though their cost of the unit was almost $300,000. It was based on the gross sale price. So there are things that can trigger an audit that are a little unusual. Cash receipts report really just summarizes what money came in and what money came out. It's a fairly simple report. But all the financial statements have to contain an accountant or auditor's report. Can be that, as I say, if it's below the amount, it's just a compiled report. It could be an accountant's report. Balance sheet, a statement of revenues and expenses. And we're going to show you these a little more later and how to read them, as well as a statement of changes in funds, a statement of cash flows, and notes to the financial statement, making any disclosures. Things that are often disclosed are things like the membership having voted to waive the reserves. We'll probably be seeing the end of that financial statement note this year with the changes in Florida law. Compiled financial statements are basically an aggregation. They can be produced by anybody. It doesn't have to be a CPA firm. They give no assurances as to the reliability of the financial statement or the data. They must include all the disclosures, however. Okay, a reviewed statement, as I said, must be prepared by a CPA firm. The CPA reviews the information, checks it to see does it make sense. They do not verify everything. They're just doing a cursory check to see does the revenue collected match the revenue that was in the budget, for example. You know, if the reserves were to be funded, were they funded, and are the funds accounted for? Those types of things. And they are going to do disclosures telling you what they find does not appear to have been done that should have been done, or what should be done better, as well as telling you that these statements were reviewed. They also have to be done to GAAP principles. So that's generally accepted accounting principles, and they will make any of those adjustments as well. And of course, an audited statement means that the independent CPA firm has conducted its own checks of things like bank balances, revenue. They've done some required verification and verified that the statements are accurate that are being presented. These are year-end statements. It does not necessarily detect fraud, however, but they will also, of course, ask for statements from the board and the management company attesting to how the data was obtained. And as I say, there is a fair amount of verification, amounts of bank balances being verified, of reserve funding being verified, of revenue being verified to budget that it was collected, and bad debts accounted for, and all of that type of thing. And an attestation by the CPA firm that says they've examined these financial statements, and in their opinion, they represent a true and concise picture of the association. Okay. When you're required to have compiled statements, you can always get something more comprehensive, such as a review or audit. Or when you're required to have a review or audit, a review, you can always get an audit. An audit's about as comprehensive as it gets and contains some assurances from the CPA that did the statements. And it also contains some disclosures, as well as telling you that there are some things they didn't check for. You'll get an auditor's statement with a cover letter like this and an independent auditor's report like you see here, and it will have disclosures and information. Disclosures could include everything from the association keeps funds in excess of the insured amount at their bank and may want to segregate the funds into multiple banks. It might talk about the controls for paying bills and that there's only one signature and there should be two, or other things that would make the association more secure. Okay. An association can waive the financial reporting requirements, but this must be done before the end of the year. So if you're required to have an audit, you can waive, your members can waive the audit requirement, but the vote has to be taken and this has to be done prior to year end. You can't get to the end of the year and decide we're going to go back on voting and waiving the audit for this year. You can only waive an audit or waive a review in that matter. You can only waive it for no more than 3 consecutive years. So you can waive it for 2 years, and in the third year, you would have to have your audit. It is never a good idea to waive an audit when it's required. And remember, I gave you these numbers. $300,000 and above requires a review. $500,000 and above requires an audit. But you could be required to have an audit if your receipts are less, or a review if your receipts are less, because if your governing documents say that your association is required to get an audit every year, then you would have to get an audit regardless of the amount of revenue that you have. So your official records of the association, or copies of the financial reporting, have to be maintained, and they need to be, as I spoke earlier, made available to any current unit owner or any prospective unit owner at a reasonable cost. That cost, which can be paid by the buyer if somebody's buying a unit, but is technically the responsibility of the seller. So if you have a seller come to you and say, I need a copy of the financial statements to give to the buyer, you can make that available at a reasonable cost. If they haven't gotten a copy, they could certainly photocopy their copy. A copy must be provided to any purchaser of a condominium unit. The same is true for a co-op, at the seller's expense. So it's important that you know that they can get these annual statements, and hence that auditor's note that says you've been underfunding reserves could affect the value and the selling price of units in your building. All right, no questions, so we will move ahead. Financial information, this is really there not just to get you these annual statements, but so that decision makers can make better decisions. Financial statements are really a roadmap to the spending and income and needs of your association. They're useful to boards and managers that need to know what the annual financial reporting is, but need to also know where during the year how much they've spent and how much they've got left to spend, and are we going to make it on budget? Are we operating where we need to be? Annual financial reporting is old news, so monthly reporting is what is recommended. Getting a monthly financial statement from your management company or accountant that tells you the most current information you can get, what's going on and where we are, so that you can make adjustments to your decisions and understand what your ability to spend is going to be in the coming months, as well as where you stand financially. Monthly financial statements provide transparency, and they allow anyone a clear picture of what's going on with the money and funds of the association. So it is important not just to have that annual information that's required by the state, but to have the information on a monthly basis that allows you to make sound decisions. Financial statements can be kept on 2 bases, cash basis. On a cash basis, we count only the money we actually receive and only the bills we actually paid. I have a lot of problem with cash basis, And the reason for that is I've taken over associations where the board comes to me and says, the only thing good about our prior management is we were right on budget every year they managed us. And I look and they're doing cash basis financial statements. And then you go sorting and somebody like the landscaper tells you, well, they're $10,000 behind on paying me. And you find out they're behind on the water bill. Because cash basis only counts the money you actually pay out and the money you actually receive, it does not give you an accurate picture of the financial health of the association. We picked up an association about 5 years ago, and they told me this story about their manager did a great job on budgeting. He just didn't do a good job on projects and compliance and all the other stuff they needed. And we came to find out as we did a little research that while their financial statements showed that they collected what their budget said and they spent exactly what their budget said, they had over $80,000 worth of unpaid bills, many of which were 6 months to a year old. They had never been accounted for because there was no money there to pay these bills. They would have been accounted for in an accrual system. In an accrual system, we count income when it's due. Even if we don't receive it, we make an allowance for bad debts if we think it's going to not be ever received. But we count income when it's due, and we count expenses when they're due. If we run up a plumbing bill of $10,000 in June, that $10,000 plumbing bill has to show up in the June financial statements, even if it's not paid to July, or even if it's going to be paid in July and in August. It would still show up so that we know we had paid, we ran up a $10,000 bill, we've only paid $3,000 of it, and we still owe $7,000 of it. So accrual financial statements give you a much more accurate picture of the health of your association. For example, if you had a cash basis association with $5,000 in income and it showed $3,000 in utilities and $1,000 in maintenance expense, okay, it would have net income still of $1,000. That's messed up there. Okay. But the same association, $5,000 of actual income, but it has $3,000 of expenses for utilities, $2,500 worth of maintenance, and $3,500 worth of landscaping. Now, both associations have the same obligations here. Even though it hasn't been paid yet, in the accrual statement, it shows up on the books. On the cash basis statement, we show no expense for landscaping, not because we didn't spend the $3,500 on landscaping, but because we have not paid the landscaper at this time. So you can see that accrual reflects everything that's actually happened, while cash reflects only those things that were paid. Okay, the same passes through to the assets and the balance sheet. You will not see, we have cash in the bank, but that cash in the bank on a cash basis does not include that there's money we owe. So very important. All right. So we're going to move ahead to the balance sheet. The balance sheet tells you on a specific date at a specific time, typically end of the day on the last day of the month, what various balances the association had in things like cash and accounts receivable and other assets, and what it owed to other people. And that's at that specific point in time. The income statement shows you how much revenue was collected or income for the specific period of time. Now, it typically will show the current month and the month-to-date amounts and how much expenses were paid out for that period of time, the current month and the current month-to-date. And it reflects on an accrual basis those expenses, whether they were paid or whether they were just accrued. In other words, we ran up a bill, but we haven't yet paid it. Statement of cash flow shows what the change has been in the cash in the association, how much we took in, how much went out, and what the change was in the cash flow. Accounts receivable summary shows us what owners still owe us money and how much they owe us, while accounts payable summary shows us what do we owe to our vendors or others. And then a detailed general ledger, which we're going to get into a little bit more, gives us a detail of each expense that we had and each time that expense was paid, the cash going out, as well as the expense being charged and either put on accounts payable or paid in cash, and the income as it comes in from our unit owners and goes into accounts receivable, and then we receive the money to pay down the accounts receivable. The detailed general ledger has lots of detail and is a very useful place for board members and managers to go. We also have a bank reconciliation showing that the banks have been reconciled to the financials and that accounting for any uncashed checks or undeposited funds in that bank reconciliation. So we have a balance sheet, and the balance sheet, as I said, shows the current balances. Now we do something a little different. We show a comparative balance sheet. Here I have the December 31 balances. Just give me a second to get my little laser pointer. Okay, so, all right, so here we go. Here we have the balance for December 31. Oops, backwards. December 31. And here we have the prior month balance and then the net change. And I'm going to show you this in a little more detail as we go. But we have the cash in each of the bank accounts. We have the accounts receivable. We have any of the prepaid expenses, such as insurance. You typically pay that once a year, but you've paid 12 months worth. So we have some of that's been prepaid. Maybe prepaid taxes can come in there. We would also have the accounts payable, what we still owe, as opposed to what we still owed last month. And then other current receivables, insurance payables, security deposits, deferred income, those types of things. And the last part is the equity part, the owner's equity part of the balance sheet. Okay, great. So next we have the income statement, and here we have the December for the month, the balance, and here we have for the year the amount of income. That's the beginning. Okay, you'll note in our world, we also put right next to that the budget. So we received $41,078.41 for maintenance fees. We had budgeted $41,028.58. So we're $40 and change above the budget for the maintenance. And we go through that for each of the expense categories. And when I look at the total, during December, we took in $50,797. That was how much revenue we were entitled to. We only budgeted $48,388. So we're about $2,000 over for the month. For the year, we budgeted a total of $580,683, and that's the actual amount. And for the year to date, we have here that we actually budgeted $583,644, and we're $9,000 difference in our budget. So I'm reading something wrong here because I can't see the numbers. Oh, because that's a zero. All right. Anyway, so we've got the annual budget as well as the monthly budget. And we have this for the expense categories. So if I want to look at what my administrative expenses are, compared to the budget. My administrative expenses, I'm $4,800 below the budget for the month, but I'm $40,000 below my budget for the year to date. So, and we can go down here and I have the insurance information broken out, the landscaping information, the repairs and maintenance. So everything is broken out and I can look at each number for the month or for the year to date. The statement of cash flow starts out with the current income after our expenses. We had net income of minus $3,500. It then shows my change in accounts receivable, my change in prepaid insurance, and all of my other non-cash adjustments that use up part of my cash that are on my statement. And it tells me my cash at the end of the period went from being, cash went up $5,731. It went from being $24,458 to $30,189 at the end of the period. Okay, an accounts receivable report lists every unit and tells me what the current outstanding balance is, what's been 1 to 30 days, what's 30 to 60 days, what's over 90 days, and what the total that is owed. Now, on my accounts receivable, which I have blacked out all the names to protect the guilty, I also show who has been assigned and is in legal. So I have 4E here, and 4E, it tells me this is in legal, and they owe $10,000. Okay, there was a credit for $2,000 that was carried forward, but they owe another $11,000. So we have a $10,000 total balance due. And we can go through this line by line. Oops. I then have an accounts payable aging summary. And this shows, for example, we have an outstanding bill. It's new. It's 1 to 30 days old to the locksmith for $98. We owe AmSan $78. We owe CA Lindell of South Florida $12,000, and we owe this to them. It's over 90 days. So either there's a dispute, we're waiting for them to finish something, but there's some reason we're holding back that part of their payment. And it gives me the total of outstanding payables that we owe other people at the end of this month, as well as the aging of all of those payables. The general ledger lists each transaction. So we deposited money in the bank. This is a bank account. There's $4,000 going into the bank, or $4,500 going to the bank account. There's another deposit going into the bank account. Then we come down here, and there is a payment to FP&L coming out of the bank account. There's Indoor Oceans coming out of the bank account. There's Waste Management, and you can see money going in and out of the bank account, some by ACH or EFT and some by check. All right, attendance period. If you're here, raise your little virtual hand and let me know that I'm not talking to myself. And then we can go on to the next part of this. If you would just please raise your virtual hand and let me know that we're still doing good and that you understand and that we don't have a problem. Okay, great. Moving along. Okay. Reading and understanding the financial statements, the ability to drill down is very important. Looking at those financial statements can tell you, the balance sheet will tell you the health of the association. Do we have the money to continue operating going forward? Do we have enough cash to pay all of our bills? Are we doing better or worse than last month? How much do we owe? And do we have reserves? If so, how much? All of that is reflected on the balance sheet. So you can see here, we have the account balances for December. In the operating account, we had $22,892.99, up from the $17,161.80 we had in November, or a net change of $5,731.19 to the plus side. There's a special deposit account here, and that did not change. It's exactly the same as it was last month. And our accounts receivable went down from 73,242.93 down to 66,043. So some of our folks paid off some of those older bills that they had in those open accounts receivable. And in fact, our receivables went down $7,199.85. Okay. The allowance for doubtful accounts has remained the same, but our prepaid insurance accrual has changed. We have a bunch more in prepaid insurance. Insurance bill came up and we had to put money down again, pay for the year. So this one is paid in advance. We have no other prepaid expenses other than some prepaid taxes that we're carrying for the end of the year. Now that's the assets. Assets on a balance sheet always match the liability plus the equity, and the liabilities are the accounts payable. Our accounts payable went up about $2,015. And then we have insurance payable. That'll come out of the accrual. We have security deposits. They stayed the same. We have deferred tower income, some income from a tower that we got prepaid up front for. Excuse me. And we have some deferred insurance proceeds. So that gives us our total liabilities. And as you can see here, the income statement shows us how much have we spent this month and on what we spent it. How do actual expenses compare to what we budgeted? How do actual expenditures compare to the budget for the year so far? Are our maintenance fees and other income adequate to meet the ongoing expenses? So when we look here at the balance sheet, okay, we can see the month. We can see the balance sheet here for the month. Okay, so here's the month. And we can see the budget up and down here, as well as the amount over or under the budget for the month. So we have income in all the different categories. And then we have expenses, administrative. We break these down to subtotal them. So we have the administrative expenses, get a subtotal for the administrative and a comparison to the budget line by line. We have insurance as a separate category. We have landscaping. We then have repairs. And you can see the categories repairs this association has. And then okay, so repairs run through here. We have the utilities, and we've broken that out. We're $917 under budget for utilities, as you can see here. There we go. All right, then we have payroll, and we are $1,474 under budget for our payroll expenses. And then last but not least, we have the special projects that are going on and that were budgeted. So this gives us a great idea of exactly where we stand. We have the same thing. We have the same thing on an annual basis. So here's my annual. my annual total annual total for the pest control, if I go back, I would have everything coming down annually and an annual budget number. So all my revenue and everything shows annually, so do my expenses. Okay, so my total expenses for the year, for the month, were budgeted at 54,343, and we spent 53,641. So I am $701 above for my total expenses, my budget. And for the year, we have that we spent 718,148, but our budget was 643,708. So we're $74,000 over our budget for the year in expenses. That brings us down to the net income less expenses. And you'll note that for the month, we spent $35.45 more than we had in income. And for the year, we spent $128,000 more than we had in income. So we had budgeted to spend more than our income to use up some of our excess funds from prior years, but we spent even more than what we had budgeted. So we're over the budget by $65,000. Okay, so that brings us again to the income statement, and you can see there's a whole section that is the month, the actual information, the budget, and the difference between the budget and the actual. And we have the year to date, actual, budget year to date, and the variance. And it's just been broken onto 2 pages. The accounts receivable summary tells us who owes the association money, how much do they owe us, and who has prepaid the association. Maybe they paid in advance. So again, we have unit O1E, and O1E owes $860 that is 1 to 30 days due. They have 31 to 60 days, another $860. And they have over 90 days, $31.50. They owe a total of $4,870 to the association. Okay. Then we have O2B, and O2B is in legal. I talked a little bit about them earlier, but it tells you that they're already in legal. And we have another one that's in legal here. And there we go. We have another one that's in legal. So this association had a number of, now remember, this all happened back in 2012 when things were a little rougher. I don't know if they were rougher than now, but so many associations had a collection problem back then. Accounts payable tells you who owes. We have this outstanding bill to C.A. Linderman. They're waiting for a final on a permit so that they can pay this is the 10% holdback on this job, I happen to know. Okay, we have Express Glass and Board, and this $600 is being held because this association is disputing a charge. But you would have all of that so that you can see exactly what's going on if you're a board member or even if you're an owner. The detailed general ledger lets you see detail on transactions by transaction. on that level. So it provides detail of all the transactions posted for the period, which is typically a month at a time. It shows each invoice, bill, or check payment that all goes through whatever account, whether it's going through the bank account or going to an expense category account. It contains individual transactions for both the balance sheet and the income statement. So again, we know that the cash is on the balance sheet, and this account started with $17,161.80. And then we add the deposits, money going into the account. We subtract the money going out of the account, and we get a running balance for this cash account. Okay, the balance sheet goes on. When we get by the cash account, we see the receivables, people being charged for their, people making payments on their account, receivables. And we have accounts payable. So these are things, bills that were owed that were not paid at the, we got an invoice, we posted the invoice, then later on we wrote a check to pay off that invoice of the accounts payable. On the income statement, if I want to know what the heck did we spend on janitorial expense for $920.73, I can go look that up on the general ledger. I would go to account, we've got to use account numbers, 5655. So I go here to 5655 janitorial expense, and I can see that AAA, Building Maintenance Service, charged $825.64. And we also purchased something from Greiners. They're typically janitorial supplies. And that was $95.09. And again, so far before we got to this month, we had spent $7,028.52. When we add these new transactions, we have now spent $79.49.25 on janitorial expenses. And you can see here that each thing from janitorial, if I want to know about repairs, I can look at the repairs number. And all of the transactions in repairs, along with who they were paid to, are shown. So there's your janitorial transactions. There's the janitorial supplies transactions. Controls are procedures to protect the association and the board. We're trying to protect the assets of the association, the money and other assets. You want to protect the integrity of association funds. Typically, that's why we require 2 signers on all accounts. You want to instill confidence in the owner that the money is being protected and properly handled that's in the bank. We also want to protect the reputation of the board and the board members. This is really important. It's easy as a board member or an officer to get accused of something. And the best way to prevent that is to not create a situation that makes you look like you might be doing something. I argue with board members all the time. They want to be reimbursed for something they spend on behalf of the association, which is fine. But if you're being reimbursed by the association, even if you're the president of the association, don't be a signer on the check that reimburses you for the lawnmower gas you went out and bought or anything else, because then it looks like you're writing checks to yourself. If the check is being made out to you, and it should be if it's reimbursement for something, maybe you went out and bought supplies for the association or picked up light bulbs or did something, then when the check is made out, make sure that other board members are the signers on that check and not you, because we want to protect you from wrongful accusations, and that's just one of the good ways to do that. You want to comply with all the accounting standards set by your auditors on your last audit. You want to avoid non-board approved financial activity. and you want to protect the association's assets. You should have controls like 2 signatures or 2 approvals on all checks or release of funds from the association. The release of funds should be approved by board members / officers, really by officers, and not just by the managers of the association or an association employee. Invoices should be reviewed and all items to be paid before signing a check. So when you get the check, you get a copy of the invoice so you can look and see what the heck is it we're paying for or approving a check to be paid. You should not be making cash payments from an association. All transactions should be by check or direct bank deposit. That prevents anybody from saying anything about how the cash was accounted for. For best control, payments sent to bank lockboxes. So they're not handled by the management or staff of the association. They go direct to the bank, who deposits the payment into the association's account and provides the management company or board with a deposit receipt notice that says, here's who we got money from and here's how much. It's already in the account. We're not handling that. We should not have petty cash funds. Those are always a source of problem. Associations should not have credit or debit cards in their name. That's another large source of fraud or problems that often get out of control. You should regularly review, if you're a board member and or officer, you should regularly review the financial statements, bank statements, and financial activity of the association. Ask questions of the treasurer and or management company when you don't understand a transaction or have questions. We should make sure that if you still have coins at your laundry, and we've done away with coins in most of ours, that the locks require, it's a double lock, and it requires 2 people to get the coins and witness what's going on. Better yet, card-based systems or non-cash-based systems, not to mention coins weigh a ton and counting them is no fun. Officer, if the association has employees, officers or board members should deliver, make sure you know who the employees are that you're seeing on the paycheck. You might even want to deliver those checks semi-annually to make sure that those checks are going to the employees that are listed and that you know who's being paid for what at your association. We have come across larger associations where there are people on the payroll that don't exist. And we do payroll verification and we find out that somebody's getting money that never worked a shift. So it's a good idea to know who and what is being paid. You want to verify that all the vendors have business licenses and the proper insurance before processing a payment for a vendor. Do they have a license to do what they're doing? If they're an electrician, do they have an electrician's license? Do they have a business license? Are they a landscaper? What are they doing? And do they have the required insurance for whatever they're doing, including liability and workers' comp? Officers and board members should not sign checks. I talked a little bit about this already, reimbursing themselves. If the check's to you, have somebody else sign it. Good controls protect both the association, the owners, and the management, and it protects you from wrongful accusations. Most of the boards I know are good people that want to do the right thing and work really hard to do the right thing. That, however, does not stop somebody of accusing a board member of something. And even when it's not so, if they can make it look like it, and if there's enough screaming and yelling long enough, people tend to believe things, even when they're not true. Don't let anybody be able to besmirch or tarnish your reputation. The sunshine is a great disinfectant. And making the records public as required by Florida law, allowing open meetings, is going to help enough people around knowing that this was discussed and what is happening avoids those people that say, nobody told us, they're doing something behind our back. So appreciate your open meetings, notice your open meetings, go above and beyond. Our belief has always been that we email all the unit owners of a meeting. We're now making meetings available by Zoom as well. And the reason for that is we want the owners to be able to attend and know what's going on. The better informed the owners are, the less problems there are going to be, and the better the association is going to operate. Doesn't matter what you're doing, it matters what people think you're doing. And if you operate behind closed doors, that makes it easy for them to come up with their own explanations. So having open meetings, allowing owners to see the records easily, that can be done. We do that by providing a web portal, and all of the records, including the financial records, are there. But we want the owners to be able to have easy access to these kinds of things, because the more owners that know, it really does prevent that one or two that don't know what the heck they're talking about, but like to accuse everybody of something. The owners shut them down because they know they have access to, they can go look at things. The more information you're able to make available, the better, the less rumor and innuendo. Unit owners have the right to the records, which includes the right to make copies at a reasonable expense to the unit owner. The association may adopt rules regarding the frequency, time, and number and manner of record inspections. As I say, if you have a website that you're making these records, it makes life much easier. You don't have to be bothered by people going through your stuff. But if you don't, you have to provide access when the unit owners request access to your records. Denial of access can result in a fine from the Department of Business and Professional Regulation. That fine can be up to $50 a day. But again, if you're doing the right thing, then you might as well let them see the records and have nothing to hide, because the records then speak for you're doing the right thing. So make things available, let people see what's going on. The good news, there's always some people that don't really understand and try to basically accuse and create a problem where there isn't one. But if you've opened up things to everybody, we have found that there's always enough people that do understand and see, that can explain, wait a minute, go look at the records. That money is in the reserve account. Go look at the records. That money went to the new roof. You know, they have the information and they understand, and they won't let those accusations just fly around. Technology makes transparency easy. Our web portal makes the records available 24/7, 365. You can send email communications to people, informing them of what's going on. Telephone services we used to use telephone meetings to allow people to attend and just listen in by phone. We can allow people all over the country to observe a board meeting by Zoom. So if they can't come to the board meeting, they can observe, they can raise their hand, they can type questions in the Q&A box. We can still run an orderly meeting, but it makes everybody feel like they do get their say and have a way to participate, and we want participation. So in wrapping up, Florida law requires financial statements be provided to owners annually. They can be cash receipts and disbursements, compiled or reviewed depending on the size of your annual revenue. Remember, $300,000 you're required to have review, $500,000 you're required to have an audit, and accrual-based financials give you the best picture of your association's health. To properly use the financial statements, you need something timely. You should be getting them once a month. Financial statements are a great tool for managers and board members to carefully understand where the association's at and where it's going, and spot problems before they become insurmountable. Financial controls protect everybody, including the board. Association records don't belong to the board or the management company. They belong to the association and all of the owners. Sunshine makes everything smell better and avoids a lot of problems. It's a great disinfectant, and there are lots and lots of technology tools you can use such as websites, to make things better. The handouts for today's presentation are available at https://royal, ROYALE, management, MANAGEMENT.com/reading-using-statements-handouts/ and you can get these handouts as well as a copy of these slides there. My name again is Stephen Weil, and I'm with Royal Management Services. If you have a question or need to follow up, my phone number is 954-563-1269, or I can be emailed at Steve, STEVE, at R as in Richard, M as in Mary, S as in Stephen, accounting, ACCOUNTING.com. I really would appreciate it if you'd go to the survey at https://www.surveymonkey.com/r/XG7XG98 and complete the class survey and let me know what you think. The survey link is also available on the handout link, and the handout link is in the chat box. I hope you've enjoyed tonight's presentation, and if there are any questions, we'll certainly be happy to answer them after the end of the presentation. Just hang around and you can type your questions into the Q&A box. Thank you and good night.